You ever come across a stock that looks completely dead, but underneath, something massive is brewing? That's what's happening right now with NUBURU Inc., ticker symbol BURU. On the surface, it's just another 30-cent penny stock. Small, quiet, forgettable. But behind that tiny number is a storm. Over 100 million shares traded in one single day, and a battle between bulls and bears that could decide the company's future. So before you scroll away, let's dig into what's really going on here, because this story might shock you. The U.S. markets just wrapped up the week, and NUBURU closed its Friday session at 34 cents, technically up a fraction, around 0.27%. But that simple closing number hides what really happened. The stock moved like a roller coaster, swinging from a low of 32 cents to a high near 37 cents, and the trading volume? A staggering 101.8 million shares. For a company worth just about $34 million in total market cap, that's almost unbelievable. It means investors were fighting hard, and the market can't agree on what NUBURU truly is, or where it's headed next. And here's why. NUBURU just confirmed something that could change everything about its story. The company officially completed the first phase of acquiring Orbit SRL, an Italian defense-grade software company. NUBURU paid $1 million for a 10.7% stake, and while that number sounds small, it's a huge signal. It shows this isn't just a hardware company anymore. NUBURU is changing its identity, shifting from making blue lasers to building a future in defense and resilience technology. Until recently, everyone thought of NUBURU as just a high-risk penny stock, a company burning through cash and barely hanging on. Their second quarter report this year showed just over $100,000 in cash left by June 30th, and a total deficit of more than $150 million. That's why the company received a going concern warning, basically saying they might not survive another year without raising money. But that old story of a desperate laser company is starting to change. Here's the truth. NUBURU isn't sitting around waiting for miracles. Management has launched an aggressive new strategy, transforming NUBURU from a niche hardware maker into a diversified defense technology company. The old business was focused on blue lasers for welding copper, mainly for EV batteries and electronics, but that's no longer the main plot. The company is now making acquisitions, forming partnerships, and expanding into defense-grade tech. One of the biggest moves was the creation of NUBURU Defense LLC, a new division acting as a hub for acquisitions and defense contracts. They're using their publicly traded stock as a kind of currency to buy into other businesses, build partnerships, and gain access to new markets. The Orbit acquisition is the perfect example. It's NUBURU's way of entering the software-as-a-service space, the SaaS world, with a focus on operational resilience and crisis management. In plain English, they're trying to build tools that can keep critical systems running even under attack or during emergencies. And that's just the start. NUBURU also announced a strategic joint venture with Maddox Defense, a U.S.-based defense contractor, to develop advanced drone systems. On top of that, there's a partnership with TechNet SPA, an Italian defense company that already works with government clients. These moves could potentially open doors to multi-million-dollar contracts, something the old NUBURU could never dream of. Of course, not everyone's buying the hype. The market is split into two camps. The bearish side believes this transformation is nothing more than a last-ditch effort to survive. They point to NUBURU's weak financials and the fact that their $1.5 million Orbit purchase came from a $12 million capital raise in September, which heavily diluted existing shareholders. In their eyes, the company is just spinning a new story to justify more dilution later. But then there's the bullish camp, who see this differently. They see a company taking bold steps, turning weakness into opportunity. They argue that NUBURU's management is actually using their stock smartly, buying assets, forming alliances, and building something bigger. To them, that massive 101 million share volume isn't random. It's proof that institutional money and serious traders are starting to pay attention again. And remember, the company recently regained compliance with the NYSE American Exchange, which is a strong signal of credibility. This tug-of-war between hope and doubt is what's driving the insane volatility in BURU right now. And it's not just emotional trading. It's a calculated clash of strategies. On one side, you have long-term investors betting on the defense pivot. On the other, short sellers who see an opportunity to profit from the company's financial weakness. Let's talk about those short sellers. The short interest in BURU has surged dramatically. Some reports show it above 10% of the float, others go as high as 15.5%, and in the latest data, short interest jumped nearly 60% in just one reporting period. That's a massive buildup of bearish bets. These traders are banking on one thing, that NUBURU will run out of cash before its new defense strategy brings in any revenue. Their thesis is simple. The financials look too weak to sustain this transformation. The company's current ratio, which measures its ability to pay short-term debts, sits at around 0.04, which is extremely low. They're betting that the recent $12 million capital raise will be gone fast, spent on acquisitions and expenses, and that another round of dilution is right around the corner. To them, it's not a turnaround, it's a ticking clock. But here's where things get tricky. The short data tells an interesting story. NUBURU's days to cover ratio is only 0.2. That means if all the short sellers tried to buy back their shares to close their positions, it would take less than a single trading day because of the enormous trading volume. This makes a long-term short squeeze, the kind you see hyped on Reddit, nearly impossible right now. The shorts aren't trapped. They can enter and exit with ease. Still, retail investors should keep an eye on other metrics too, like fail-to-deliver reports, which are public on the SEC's website. High FTD numbers can sometimes indicate settlement pressure linked to shorting activity. Another one to watch is the borrow fee rate, basically the interest shorts pay to borrow shares. If that number spikes, it means shares are getting harder to find, and that could trigger sudden volatility. It's worth watching these indicators closely in the coming weeks. Now, stepping back for a second, let's remember what NUBURU was originally about. Their technology isn't junk. The company pioneered blue laser systems that can weld metals like copper and aluminum far more efficiently than traditional infrared lasers. That matters a lot in industries like EV battery manufacturing and electronics, where even tiny weld defects can ruin a product. Blue lasers have shorter wavelengths, which means metals absorb them better, leading to cleaner, faster, and more precise welds. The problem wasn't the tech, it was scaling it profitably and doing that with almost no cash left in the bank. So this new direction into defense software and systems could be exactly what NUBURU needed. A path towards stability, government contracts, and long-term revenue. If management can execute, if they can bring in consistent income through Orbit Maddox and TechNet, then maybe, just maybe, the story shifts from failing laser startup to rising defense player. But make no mistake, this is still a high-risk stock. The volatility isn't going anywhere. Whether you're bullish or bearish, BURU is now a battleground, a small company with big ambitions, a low share price, and massive volume that's drawing attention from every kind of trader out there. And that's what makes this story fascinating. Because if NUBURU actually pulls this off, it could be one of those rare transformations people look back on and say, we should have seen it coming. But if it fails, well, the short sellers will have called it perfectly. Either way, this is one of the most dramatic small-cap stories unfolding in the market right now. So, what's your take? Is this the start of something real, or just another flashy pivot in a stock that refuses to die? Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own due diligence before making any investment decisions.